Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 69, published on October 22nd, titled Best Solar Energy Stocks Plus Much More, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. The recommendations are by the article's authors. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar and you can gain access to company and fund ESG sustainability ratings. Please note, I received no compensation from Morningstar or anyone else covered in these podcasts. If any terms are unfamiliar to you, simply Google them. So I'm going to start with this article titled 10 Best Solar Energy Stocks to Buy Today by Trish Novicio in Hedge Funds News. Here are some quotes from Ms. Novicio. Insider Monkey's research was able to identify in advance a select group of hedge fund holdings that outperformed the S&P 500 ETFs by more than 86 percentage points since March 2017. So I'll begin with her recommendations, starting with number 10, Shoals Technologies Group, Inc. Hedge fund holders, 12. The Tennessee-based solar company sells junction and splice boxes, inline fuses, cables, and wireless monitoring systems. Its electrical balance of system products are used in building solar energy projects. On July 21st, J.P. Morgan analyst Mark Strauss kept an overweight rating on Shoals Technologies Group, Inc. and increased his price target for the stock to $46 from $42. 9. Brookfield Renewable Partners LP. Hedge fund holders, 20. The company supplies electricity internationally through renewable energy sources such as solar and wind energy. On September 22nd, Raymond James analyst Frederick Bestian upgraded Brookfield Renewable Partners LP to outperform from market perform and increased his price target for the stock to $44 from $41. 8. Clearway Energy Inc. Hedge fund holders, 21. The New Jersey-based energy company is one of the biggest renewable energy providers in the U.S. with over 4,700 net megawatts of installed wind and solar generation projects. On August 26th, UBS analyst William Grippin initiated a buy rating on Clearway Energy Inc. with a price target of $36 per share. Shares of Clearway Energy Inc. jumped 2.08% on September 22nd as the solar company announced its second agreement with Toyota Motor Corporation North America to supply power to its manufacturing facility in Mississippi. 7. Sunnova Energy International Inc. Hedge fund holders 25. The Houston-based solar power company sells residential solar energy systems and storage solutions. On August 31, Wharf research analyst Steve Fleischman initiated an outperform rating on Sunnova Energy International Inc. with a price target of $50 per share. 6. First Solar Inc. Hedge fund holders 31. The Arizona-based solar energy firm sells photovoltaic solar panel solutions. On August 2nd, the stock gained 2.8% after Susquehanna upgraded First Solar Inc. to positive from neutral and raised its price target to $120 from $89. On September 21st, Morgan Stanley analyst Stephen Bird kept an underweight rating on First Solar Inc. and increased his price target for the stock to $61 from $57. 5. SolarEdge Technologies Inc. Hedge fund holders 37. The Israeli-based solar energy company develops and sells residential solar systems, which include power optimizers, inverters, storage, and a monitoring platform. On August 31st, Wharf research analyst Steve Fleischman initiated an outperform rating on SolarEdge Technologies Inc. 4. Enphase Energy Inc. Hedge fund holders 44. The company manufactures and sells microinverters and energy storage for residential and enterprise solar panel systems. On September 21st, KeyBank analyst Sophie Karp initiated an overweight rating on Enphase Energy with a price target of $179 per share. 3. Sunrun Inc. Hedge fund holders 45. The company manufactures and sells residential solar energy systems in the U.S. On September 9th, Needham analyst Vic Bagri initiated a buy rating on Sunrun Inc. with a price target of $75 per share. Number 2. NextEra Energy Inc. Hedge fund holders 59. The company distributes electricity in North America from solar, wind, and nuclear energy. The company also operates coal and natural gas facilities. On July 13th, Credit Suisse analysts initiated coverage of NextEra Energy Inc. with an outperform rating with a price target of $85 per share. 1. Tesla Inc. Hedge fund holders 60. The company delivered 201,204 electric vehicles in the second quarter of 2021, up 121% year over year. Additionally, Tesla Inc. also offers solar panels and energy storage. In the Q2 2021 investor letter of Worm Capital LLC, the fund mentioned Tesla Inc. Here is in part what the fund said. Quoting from them, Tesla alone is a vertically integrated hardware and software business developing state-of-the-art manufacturing techniques that will revolutionize the auto industry, i.e. its giga presses, 4680 cells, etc. We anticipate it will eventually be the largest company in the world. End quotes. My next article is another fine piece of research from Zacks Equity Research. It's titled 4 Funds to Buy in Line with Thematic Trends in Q4 and appeared on NASDAQ.com. They mostly align with sustainable investing, though not specifically. Here are their comments on these funds. Quote, "We have selected 4 funds that carry a Zacks mutual fund rank number 1. That's strong buy. 1. Fidelity Select Technology Portfolio. Aims for capital appreciation. It invests primarily in equity securities, especially common stocks of companies engaged in offering, using, or developing products, processes, or services that will provide or benefit significantly from technological advances and improvements. This non-diversified has returned 30.7% and 31.8% in the past 3 and 5 years, respectively. This fund has an annual expense ratio of 0.69% versus the category average of 1.05%. 2. New Alternatives Fund Class A. Seeks long-term capital growth with income as its secondary objective. It primarily invests in common stocks of companies and even in other equity securities, such as real estate investment trusts and American depository receipts. The New Alternatives Fund Class A has 3 and 5 year returns of 29.3% and 19.6%, respectively. The fund has an annual expense ratio of 0.96% compared to the category average of 1.26%. 3. Parnassus Mid-Cap Growth Fund Investor. Aims for capital appreciation. The fund invests the majority of assets in mid-sized growth companies. The Parnassus Mid-Cap Growth Fund Investor has returned 17.7% and 15.7% for the 3 and 5 year periods, respectively. This fund has an annual expense ratio of 0.83%, which is below the category average of 1.09%. 4. Fidelity Select Software and IT Services Portfolio. Aims for capital appreciation. The non-diversified fund invests most assets in common stocks of companies engaged in research, design, production, or distribution of products or processes related to software or information-based services. The Fidelity Select Software and IT Services Portfolio has returned 27.3% and 28.3% over the past 3 and 5 year period, respectively. This fund has an annual expense ratio of 0.7% versus the category average of 1.05%. End quotes. The next article is from the UK and on the etfstream.com site. It's titled 5 Top Impact ETFs and is by Jamie Gordon. I'll mention the names of the ETFs, followed by brief quotes from Mr. Gordon on each ETF. Quote, 1. Rize Environmental Impact 100 UCITS ETF. Came to market in July as a one-stop shop for exposure to several segments of sustainable industry. Carrying a total expense ratio of 0.55%, this ETF tracks the Foxbury SMS Environmental Impact 100 Index of 100 companies and provides exposure to 100 companies involved in clean water, energy efficiency, circular economy solutions, renewable energy equipment, pollution control, electric vehicles, nature-based solutions, climate resilience, hydrogen and alternative fuels. It touches on each of the objectives set out in the EU taxonomy for sustainable activities. 2. iClimate Global Decarbonization Enablers UCITS ETF. With a fee of 0.65% and tracking the iClimate Global Decarbonization Enablers Index of 162 stocks, this fund offers 2% capped exposure to companies involved in renewable energy, green transportation, water and waste improvements, decarbonization enabling solutions, and sustainable products. What keeps it from the top spot on our list is the inclusion of holdings such as the London Stock Exchange Group and Uber Technologies, whose connection to impact are more tenuous. 3. The Lixor Green Bond UCITS ETF. The oldest product on our list is the Lixor Green Bond UCITS ETF, which launched in February 2017. With a total expense ratio of 0.25%, this fund tracks the Solactive Green Bond EUR USD 1G, IG, index of 578 euro and US dollar denominated investment grade green bonds issued by sovereigns, supranationals, development banks, and corporates. Aside from being Europe's first green bonds ETF, the fund has $457 million in assets under management, which is considerable versus its counterparts. The constituents in the Lixor Green Bond UCITS ETF underlying index have all been defined as eligible for inclusion by the non-profit organization Climate Bonds Initiative. 4. Invesco Global Clean Energy UCITS ETF is the newest and most diversified clean energy thematic ETF in Europe. Mirroring its equivalent US product, Invesco's clean energy play physically replicates the Wilder Hill New Energy Global Innovation Index of 126 stocks involved in the clean energy value chain, including energy generation, lower CO2 renewables, conservation, and efficiency. This fund is equally reweighted and rebalanced quarterly to reduce the concentration issues suffered by Europe's most popular clean energy ETF, the iShares Global Clean Energy UCITS ETF. Additionally, it has a total expense ratio of 0.6%. 5. LNG Healthcare Breakthrough UCITS ETF. Charging a relatively low fee for a thematic product, 0.49%, it tracks the Robo Global Healthcare Technology and Innovation Index of 84 stocks in the medical instruments, diagnostics, process automation, precision medicine, genomics, telehealth, data analytics, robotics, and regenerative medicine industries. The LNG Healthcare Breakthrough UCITS ETF is considered impact eligible by Impact Investing app Circa 500, and healthcare innovation is certainly a social good. End quotes. Now some honorable mentions that don't really fit in the time frame for this podcast, but I want to mention them. 1. Title: A multi-asset strategy with ESG can help mute short-term volatility by ETF Trends. Quote, one ETF that's worth a look is the Flex Shares Stocks, that's STOXX, Global ESG Impacts Index Fund. In the US, can opt for the Flex Shares Stocks US ESG Impact Index Fund. End quotes. 2. Title: Why Plug Power and Other Alternative Energy Stocks Surge Today by Howard Smith. Quote, shares of hydrogen fuel cell companies like Plug and Bloom Energy had jumped as much as 4% and 7% respectively in early trading, and the stock of solar technology company Enphase Energy was also on the rise. End quote. 3. Title: 3 Leading Infrastructure Stocks to Buy in 2021 and Beyond by Matthew DiLallo, appearing on Fool.com. Quote, 3 infrastructure stocks that stand out as ideally positioned to profit in 2021 and beyond are Atlantica Sustainable Infrastructure, Brookfield Infrastructure, and Crown Castle. End quote. Well, these are my top news stories with their stock and fund tips for this podcast. Best solar energy stocks, plus much more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on November 5th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.